Hi, and welcome back to another episode of The Mortgage Musketeer, where today we're going to be talking about how to budget to buy a home. But first, make sure that you stop paying your rent with cash. All right? Make sure that you get a cashier's check or write a personal check. Either way, make sure it's for the exact amount. That way we can show 12 months of payment history if we need it. All right, moving on. Now, in order to budget for a home, the first thing that you need to do is decide what payment are you comfortable with. And you can start off with what are you paying in rent. And sometimes if you got a really good deal, how much more are you willing to pay for in rent than you are currently? Right? The next thing that you need to do is figure out every monthly expense. I mean, you really need a budget. You really need to figure out what you're spending and where, and you got to be honest. And if you are single, it's just you. If you have a significant other, you need to do this together because you have to be on the same page. You have to share the same vision, because if you don't, then you're just not going to have the discipline in order to get it done. All right, so having said that, once you know exactly how much you want to pay and how much you are willing to spend, now you got to figure out what will that get you versus what is the market showing. All right, so if you have, was it champagne tastes on a beer budget, then you got some issues. All right, so you need to figure out what reality is. In order to figure out what reality is, you have to know what actually goes into a mortgage payment. All right, so you need to understand that there's really four pieces to it. There is the principal and interest, your homeowner's insurance, your property taxes, and your mortgage insurance. Because if you are watching this and you're trying to create a budget, you're probably going to have mortgage insurance, and that's okay. Mortgage insurance is fine. There's nothing inherently evil with mortgage insurance. You just have to understand, as part of your payment, you have to budget for it. So I hear it all the time where people think that, they're just thinking about principal and interest because they jump online and they do a mortgage calculator and that's all they think about. Right? So make sure that you understand everything that goes into an actual monthly payment. Here's a helpful video. All right, so after having said all that, now you really need to figure out how much you are willing to spend a month. All right, you really need to buckle down and talk to each other and say, okay, this is what we are going to be willing to spend for our home, for our future. And once you do that, then you have to be disciplined. All right, so then when you made that budget, you really need to take a look at everything that you spend and how much do you. All the way down to how much you spend on gas. A big one is how much are you spending out to eat. And you really need to look across the board and figure out, is there a place that you can cut, or is there enough residual income where you can put it away? Right now, what you do is you figure out, okay, at a minimum, we're going to need 3.5% down. Okay, so if you are looking at a $100,000 home, that's 3.5%. If you're looking at a $200,000 home, I'm sorry, that's $3,500. All right, if you're looking at a $200,000 home, it's going to be $7,000. All right, so how long will it take you to put away $7,000? All right, so you need to really figure out those numbers and then set it aside. Now you need to put that into a bank account, right? Yes, a bank account. Don't pull that money out and put it in a mattress or put it in a safe or whatever. If you are one of those people who don't trust yourself and you're afraid that you're going to spend the money, you don't need to buy a house. Period. That's a mindset. That's a weak mindset. Right? You need to cut that out. That's an excuse. It's BS. Stop. Put your money, set it aside in a savings account, and be disciplined. Because if you can't be disciplined enough to save some money up in there, you're going to struggle as a homeowner. So understand that. Here's some tough love. Just grow up. All right? And that sounds really bad, but that is tough love, and that is the truth. You need to figure out how to be responsible with your money. Otherwise, you're going to get yourself in trouble. Period. And if nobody else is telling you that, I just did. Okay, so you're going to set that money aside every single month, and then you're going to figure out how many months does it actually take you to build up. The other thing that you can do is add in your tax returns. How much do you get in your tax returns? How much are you getting in these stimulus money, all right, during this coronavirus thing? So you can actually plan for the future. So it's not going to happen overnight. What happens with people is they get in love with the idea of buying a home. They go online because of all the technology that's out there. They see a home that they want to buy. They go and they want to look at the home. They want to window shop, and then they want to go qualify. And then they find out that they don't have enough money to put it down, and then their dreams are gone, and then they just give up. Stop. All right? If that's the home that you want, You need to do the intelligent thing and figure out, how am I going to get there? All right, what do I need to save up? So you're saving up the money, you're setting it aside, and then you can figure out how long is that going to take you. All right, and then you can figure out how much am I going to be able to add with my tax returns if needed. And then you can also look at gift funds. All right, so if there's a family member that's willing to gift you some money to make up the difference. Now, you don't want to try and gift everything, because depending on the type of loan, especially if it's an FHA comes with layered risk if it's all gift. Okay, on a conventional loan, no issues, right? You can gift the whole darn thing, and just the way the system looks at it, it doesn't look at it with layered risk. But that may be a way to do a shortfall. So do your research, talk to your family members, and figure out, hey, is that a way to supplement your down payment? So if you do that, if you are methodical, if you actually figure out how to set the money aside, how much you need, and tighten your belt, and say, hey, I'm going to be disciplined and I'm going to set this much money aside. And the reason that this is important is because what happens if you're a homeowner and the water heater goes out? What happens if your air conditioning goes out? You're going to throw it all on a credit card, right? Being a homeowner means being fiscally responsible, and you're going to need to be able to be disciplined to set that money aside anyway. So if you're used to doing that, it's going to give you some contingencies. Now, I'm not saying that you don't ever want to eat out, or you just want to live, this really limited lifestyle. No, that goes into your budget. So you're going to learn how to budget, how to figure out how to manage your money, and how not to just spend it on a whim. All right, and if you do that, and if you're disciplined, home ownership is within your grasp. It is not going to be that dream. It's going to be a dream realized, because it's all just math. That's all it is. So if you can approach it like that, if you can approach it tactically, not emotionally, you'll be able to know exactly how much you're going to spend and when you're going to have that money set aside. All right? I hope this is helpful. It's really just getting your financial mind right and understanding that home ownership is definitely possible. If you want to do it, you can do it. You just have to know the math. Figure it out, write it down, budget it, stay disciplined. All right, until next time, this is the Mortgage Musketeer, and it is all for one and one for all.